Good morning, everybody. Hey, thanks for joining us today. It's Monday, May 13th. I hope y'all had a great Mother's Day weekend. A lot happened over the weekend when it came to trade with China. We're going to talk about that with Dave in just a few moments. But I do want to remind you of our free report that we offer when it comes to retirement. I want to make sure everybody's up on some of the retirement strategies that are out there. Folks, listen, if you are 5 years out, 10 years out from retirement, it's not too soon to really start looking at that. And all you have to do to get your free report is text the word retirement to 863-285-3815. That's right. Just text the word retirement to 863-285-3815. Hey, we'll get started in just a moment.
Matter of fact. 8:39. Let's check in and find out what's happening to your money. I'll throw out one of those Game of Thrones style spoilers and saying it's not good. Let's see what Wall Street's doing and responding to the weekend's events on international trade and other stuff. Downtown Sebring, we're heading to the offices of Statler Financial Services. Phillip Statler is standing by. How do you spell bloodbath, Phillip?
You know, just look at the markets, turn on the TV, you'll see it right there. Man, I was thinking maybe Friday we were going to get a little, we got a little bump on Friday. I'm thinking, okay, maybe we're going to smooth this thing out a little bit for the next week, but oh no.
No. We've kind of gotten used to the notion of the brinksmanship on the international trade negotiations. And Friday, things were saying, oh, we'll get by. Don't worry about it. We're not going to do it. And the Dow ended up 114 points. And then it all fell apart at the end of the day. And boy, oh boy, was it a rough weekend, huh?
Yeah, it was. I mean, we've got some major downturn right now when it comes to looking at the indexes as a whole. And there's not much to help prop them up right now, Dave. I mean, there's not much in the way of earnings, at least not from companies you and I know. And the macro stuff, there's a little bit of stuff that's going to trickle out later this week, but not much today.
Yeah, it's going to be one of those relatively slow news weeks, and that means the dominant news is going to be the argument with China. To bring folks up to speed that we're following it, the deadline came and went on Friday evening without an agreement with China, and that means the president's threat of doubling a whole pile of tariffs on Chinese imports taking effect. China responded in kind this morning and said, well, we'll show you. We're going to end up piling on a bunch of tariffs on stuff coming into China from the United States, and the trade war is officially on Chinese markets overnight. The mainland Chinese markets, even with the Chinese government issuing buy orders, still down by 1 to 1.6%. And when you consider the fact that that includes a whole bunch of buy orders coming out of the government, you can imagine what the real markets are like, can't you?
Well, yeah, Dave. And the other thing I found a little tip sheet that kind of gave a little detail. I find it kind of interesting though that our tariffs have taken effect now. I mean, they took effect Friday morning. China's going to raise theirs effective June 1st. They say it's going to be raised on $60 billion worth of goods, and so that's the number. 2,493 items are going to go to a 25% tariff on the Chinese side. So again, that's June 1st. So at least what do we got? A half a month to get things worked out?
Yeah, it could happen. I didn't see what the items were. I'm betting a nickel that a lot of it was agricultural goods. Am I guessing right?
Don't know. It wasn't. None of that detail was in the article that I was reading. It just gave these bullet points. I don't think anybody knows yet in terms of what's out there. One ticker did say that Boeing shares are falling drastically as speculation that China may single them out in the trade war.
Oh, well, that's one thing you got to give the Chinese credit for. They're strategic thinkers, and they hit us where it hurts. So we take one of our biggest companies that's already taking a real beating to other forces. They decide to slap a tariff on United States airplanes as a specific targeted enterprise. Yeah, that could be enough to really cause Boeing some more hurt, couldn't it?
Yeah, it really could. It's not that they're not hurting bad enough now, but I could. If you add that tariff, then that could put some more pressure on Boeing.
Yeah, absolutely. And net, even with a slight turnaround, the word I was reading is that the Dow average had the worst week since March last week, and that even includes the 114-point positive bump we took on Friday. this week is not looking one tiny little bit better and didn't get helped a bit over the weekend. One of the Federal Reserve governors with a vote on the Open Market Committee said he's not really into the notion of thinking about rate increases. The Fed was going to take a wait and see attitude toward it, and the business community really didn't want to hear that the Federal Reserve wasn't planning on doing anything and just sitting on their hands.
Well, we always like the Federal Reserve to come in and pick up the pieces and try to pump us up. Well, you know, David, they already said that we won't feel the effect of tariffs for 3 to 6 months down the road. So I think, like the Fed, it's probably premature to even start thinking about, lowering interest rates when we haven't even gotten to the point where we've got any effect on our economy yet with increased prices. Now, that doesn't mean 6 months from now that they shouldn't be looking at that. It really does depend upon how is this going to affect the overall economy.
Absolutely. It was more the statement more than anything else that just indicated the Fed wasn't going to respond. It would have been nice to have heard Kashkari say, we're watching very carefully and we'll be ready to respond if necessary. But no, he just said, we're going to sit on our hands for a while. And that just added a little bit more negative momentum onto the markets, didn't it?
Well, yeah, it doesn't take much to get those traders, riled up.
Absolutely. Off of that, that's pretty much the cause of everything that's going on at the moment. But we've got to make note of the Uber IPO last week. Everybody was excited until they started trading, and it doesn't sound like anybody was particularly excited about Uber last week, did it?
No, their price when they came out was $45 a share. It's kind of funny because right now it says on my little blotter here, the 52-week range, which has only been a week, right, is the high is $45 to close, and the low is $41. So they've not been doing well on a weekly basis, and so even now, man, it's even dropped further than when we talked earlier. Dave, it's down almost 6.5% this morning before the market opens, down below $39 a share.
Good heaven! And for the sake of reference, IPOs, they started out on the low end of what their expected range was going to be. Normally, folks expect, a big bump right after the initial public offering comes up from the original stock asking price, make a bunch of the original stockholders fat and sassy, and then if it's going to go down, generally happens after the original bump. This thing just started falling like a rock from the day they started selling them.
Well, it did. And you and I talked last week about that. And, I think that they were probably premature, in my opinion, in coming out right now because, all they had to do was look at Lyft and look at they weren't blowing the doors out of it either. And so, I think they're just a little premature in coming to market.
And timing sometimes can be unfortunate, too, right about the time that everybody's selling stocks like Chiclets, worried about international trade. An IPO kind of gets buried in the wave, too, a little bit, I've got to assume.
Well, it does because as the market, sometimes if the market's heading down, then everything's going down. It doesn't matter what you're invested in. And so, Uber is going to be suffering from that, too.
Absolutely. As you said, not a lot of notable industries reporting this morning so far. What do we have on the table for this week on a pretty quiet week as far as macro stuff that might give us at least a little salvation?
Well, we've got not much tomorrow. We've got crude inventories come out this week. And then Thursday, we've got the wholesale inventory. We've got PPI comes out on Thursday, and initial claims comes out on Thursday. And then let's see here.
An initial look at inflation might help us a little bit in terms of a swashing concern, right?
Yeah, and then we've got, it helps if I look at the right week, Dave.
We're kind of noodling this through in real time, people, as we go, hoping for something interesting.
We got housing starts and housing permits on Thursday.
So a positive news on that could help us a little bit as time goes on.
Definitely could. So, we just, like I said, there's not a lot to help move the needle this week.
Oh, Lordy, and the needle ain't moving in a good direction. We're 45 minutes before the markets open up now, setting the table. As mentioned, we kicked up a little bit on the Dow on Friday, ended up with a 114-point gain, which just saved us from being the worst week in how many more months. We ended up with the worst week since March, even with a gain. NASDAQ up by a little bit on Friday, and the S&P also up by a little bit. We're talking about tenths and hundredths of a percent, though. 45 minutes before the opening, it is red ink this morning. How bad is it, Phillip?
It's pretty bad, Dave. It's it's worse than what we've seen for a while now. The Dow's down 1.8%. That's $476. The S&P is right there with it, down 1.9%, which is about $55. NASDAQ is trying to, it wants to be better than everybody. So it's down over 2.5% this morning. That's $196 on the NASDAQ. Gold is ticking up, not enough to really even mention. It's up $1 an ounce. And we've got silver down 15 cents an ounce, which is about 1%. Crude oil is ticking up from where it closed on Friday. It's up 1.8% to $62.79 a barrel.
That's getting too close to 63 for comfort, just adding one more point of misery to the markets. Overseas, mentioned that the Chinese mainland markets were just absolutely down precipitously. Hong Kong managed a slight gain for some reason. Japan, though, and the European markets all pointing downward this morning. Phillip, somebody want to find out how to stabilize things, stop the bleeding if necessary, and at the very least, make sure retirement is pleasant for you and your family. How do I find you on the phone?
Well, Dave, we've talked before that when volatility really starts to play, it's time to make sure you don't have too much risk in your portfolio. And that's really what our financial X-ray report does, is it digs down deep to figure out how much risk you're exposed to. Call us right now to schedule your appointment, 863-382-0037. Follow us on Facebook at StatlerFinancial.com. I'm sorry, that's my website. Facebook, Statler Financial Services. And then join us every weekend for the Statler Financial Radio Show, where we talk about a lot of these issues that come up when we're getting ready to retire. And that's on News Talk 730, noon on Saturdays, 10 a.m. Sunday mornings.
And streaming on newstalk730am.com. Phillip, thank you so much. Let's cross our fingers. Some good news crosses the wire today, and we can talk about how we recovered a little bit before the end of the day. Fair enough?
That'd be nice in the morning, buddy. Talk to you then. Bye now.
Thank you, and it's 105.7 Light FM and Statler Financial Services, Phillip Statler.
So as we said during the show, there's not much that's going to help move this market up from an economic standpoint, and earnings reports too. There's nothing major coming out this week that I've seen looking ahead a little bit. So, but I do want to remind you, especially with this volatility we're seeing in the market now, it's vitally important that you're prepared for your retirement. And one way to do that is to get our free report on retirement strategies. And all you have to do is text the word retirement to 863-285-3815. It's that easy. You can do it right now. Text the word retirement to 863-285-3815. Hey, I hope you have a great day. Look forward to speaking with you tomorrow.